Welcome back to Piper Academy and this week's video in the Legacy series. I'm Army Piper, and this week I'm bringing you some super important info you need to know for 2025 and beyond. Major changes are coming to how you file crypto taxes in 2025, and the stakes have never been higher. Starting January 1st, 2025, new laws will require brokers to report your crypto transactions directly to the IRS, including cost basis details, making your tax liabilities far more transparent. The need for compliance is underscored by a recent landmark case where an Austin man became the first to be sentenced to prison for cryptocurrency tax fraud. His 2-year sentence serves as a chilling reminder that the IRS is cracking down on noncompliance in the crypto space. For traders and investors, this is a major wake-up call. The days of flying under the radar are over, and the need for expert guidance should be your highest priority heading into the tax season. Today, we're speaking with the founder of Decrypted Tax, a firm dedicated to helping crypto investors stay on top of these evolving regulations and helping them avoid costly mistakes. They do my taxes, and they get the one hondo in the field of trust from me. If you're a trader or invested in crypto, you are not going to want to miss this valuable information. Let's dive into how they're preparing their clients for this new era of crypto tax enforcement. Get your notebooks out because class is in session. Guys, today we're joined by Ernest from Decrypted Tax and F.D. White of F.D. White Invest and the co-host of the Crypto Nightcap. We're going to be doing a little panel here today, ask some questions, and get all of this knowledge that you guys need. Let's go ahead and bring up the founder and the owner of Decrypted Tax. Glad to have you here. How you been, first of all, and how are my taxes looking?
I've been really good. Your taxes are looking just fine. We're doing some end of year planning. I'm sure Lincoln in our office here, he's hard at work on tax loss harvesting suggestions for folks. It's real important to, at the end of the year, there's a number of moves you can make. Tax loss harvesting is generally one of them. Essentially what you're doing is you're selling some of your crypto that's in a loss position so that you can realize those losses to offset any gains you had during the year. And so it's a little bit of a complex calculation, but we determine how much you can actually realize at the 0% rate if you're eligible for the 0% rate, which is up to $49,200 in the current year, depending on your tax situation. And so we get clients to realize those gains up to that amount, and then they can have that at a 0% rate. And so then if they buy that crypto back right away, then they're stepping up their cost basis in the crypto that they have in their wallet. This year is way different. And so you do all of that, but also, like you mentioned, the exchanges are going to start reporting your cost basis in your assets you have on exchange. And so they're going to be able to more accurately guess at what your income is from your, yes, that's right, from your sale. Basically what they're trying to do is they're trying to identify if you have crypto in a Coinbase account and you buy it in a Coinbase account and you sell it in a Coinbase account, you can calculate what your capital gain is on that particular transaction. Historically, it's been on a universal basis. You could choose what tax basis you used to sell when you sold crypto in Coinbase. It doesn't have to necessarily be the crypto that you had purchased on another exchange or on another wallet. But after January 1st, everything's going to be tracked on a wallet by wallet basis and on a first in, first out basis.
Yeah, so I know that that's why F.D. White wanted to come on today. I'm going to go ahead and bring him up with us because a lot of people, they've got multiple wallets everywhere. I know F.D. White, you've got crypto all over the place in many wallets, right?
I got a lot. Maybe, I've been trying to get the dust, so to say, and put it all into maybe like 5 or 10 wallets. But I mean, I got crypto everywhere. I got airdrops here. I got, crypto I bought in 2020 here, over here. And he alluded to something that a question that I had. So I know we'll dive into it about that wallet by wallet basis. So that is definitely the reason why I'm on here today, because I'm the wallet king. I'm definitely the wallet king. So appreciate you, Ernest, for coming on, and I'm all ears.
Yeah, for sure.
FD White's got like Tangem one, Ledger one, you know. So yeah, I think that the big questions that we have today, Ernest, is just to put this in perspective for the viewers. If you guys are watching this, you need to know this answer. What changes from December 31st, 2024 to January 1st, 2025? What is the biggest difference that's going to mess people up and maybe get them in trouble in the crypto space?
So if you have, let's just say you have two centralized exchange accounts. You have a Kraken account and you have a Coinbase account. And Coinbase, you haven't used it in, let's say, a year, but you have Bitcoin in your Coinbase account that you purchased at $30,000. And then you have Bitcoin that you purchased in your Kraken account at $100,000. Any of the Bitcoin that you sell in your Kraken account is going to be taken from the pool of crypto that you have in your Kraken account. And so you won't be able to use the cost basis of this account to offset this one. That's the difference. And so everything's tracked on a wallet by wallet basis. They're trying to do that so that the IRS can better understand what your gain is. But ultimately, what people need is, here I'm a shameless plug, Decrypted Tax. They need to have software that's tracking all of that basis, and we track that basis on tax lots, and we identify the highest in, first out accounting all the way up until 3 days from now. And so the important thing for your viewers to understand is that you have to actually elect that basis allocation and sign a statement that says you've elected that basis allocation before January 1st. Now they can go on to the Decrypted.tax website. There's a link at the top that talks about, it says Revenue Procedure 2024-28. They can click that link, automatically go to a form. They just fill out their details and sign that form. And then it'll email you that form, email the person that form so that they have it. And we do that for clients or not clients, it doesn't matter. And we have that available to the general public, but also to potential clients.
Perfect. Yeah, and I know that was one of the big things that that you contacted me for was that, look, we got the new API software. We can track all your different wallets. So I'm sure that software, the API, the infrastructure that you have at Decrypted.tax is going to help out immensely with this new change to the policy, because it's not easy to keep track of, when did I buy this? When did I add to it? When did I dollar cost average? That creates a lot of transactions that it makes it much easier for me to not have to worry about, because I better call Ernest, like it says down there in the corner. You guys have all that software in place. So is first in, last out just gone now?
So you move on to first in, first out accounting after January 1st. And
Okay.
It's first in, first out on a per wallet basis. You'll have to have the crypto that you want to use, you'll have to have in that wallet. You want to make sure you're selling it off of the right wallet if you have them in separate wallets. And then you want to also make sure that you're consolidating FD White. You're consolidating some of your wallets so that it's easier to track. That being said, it doesn't matter if you have 100 wallets. If you have good software, like we have at Decrypted Tax, the software is provided by Node 40, institutional grade accounting software for digital assets, and it's all stored on an AWS and Amazon Web Service secure server. And so you can be assured that your data is protected, and you can also be assured that we're calculating it in the most tax efficient manner.
So we had a question here from one of our community members, and he said, when you have purchases over multiple years, is there not a way to differentiate what coins are at what cost basis? Will they still be able to do that with this new system?
Yes, they will. They'll still be able to
Okay.
do that. It's just a matter of what gets allocated. So when you let's say you bought Bitcoin every month, you buy one Bitcoin for the last, you're lucky. We bought one Bitcoin for the last 2 years every month. With the new accounting after January 1st, you're going to have to account for it on a first in, first out basis. Now, if you don't do this election, and I know this is it's a little bit frustrating that they do a ministerial sign a piece of paper for an election. Otherwise, you're going to get in trouble. But if you don't do this election, then the IRS could say that you're on a first in, first out cost basis, going retroactively back to the beginning, and that's what they're trying to do. They're trying to get you to set the cost basis for all of your assets effective January 1st, and they're asking for an affirmative statement that you're going to set that cost basis as of January 1st.
Got it. So, so as far as this reporting, this change of how you are reporting your tax, your crypto, this will all actually be in 2026's tax filing. Then we won't see this take effect for this upcoming filing. So we have a year. We have a
Right.
year to get this right. Right.
Yeah,
Do
you have
you
a year
think?
to get it right, but you have to make the election before the end of this year. And so
Okay.
you really want to make that election in the next couple of days. Go to our website. It doesn't cost anything. We're not gonna require that you sign up with us. Any person can go to our website and make this election, and then you get the PDF election form that's time and date stamped into your email, and that will be that'll be what you use to show that you made the election before the end of the year.
Perfect. Yeah. And I got all the links down below in this video. So you guys need to go check it out. And if you want to use Ernest and his team's services, the link is down there also. You'll get a nice little discount and free consultation. So I promise you guys, he does my taxes. He does Piper Academy's taxes. A lot of our team members use Ernest. He knows his stuff. One last question that we had was LBC, Lunar Beaches Crypto, here in Piper Academy. He wants to do a community portfolio with the members where they can allocate on, and he'll put money into it to grow it together. And then what is the tax implications of that? Because I'm sure that gets into some very wacky, you're going to pay all the taxes for all of your people that you gave crypto to. Or is there a way for him to track those as gifts? I mean, how all would that work, Ernest?
So what you're describing is a common law partnership, I guess. The smartest thing for him to do would be to set it up as an LLC, and then he can allocate to his members the income from the LLC. And we do that. I'm also an attorney, and I help people set up businesses all the time. I would set that up as a trading LLC where he had a limited liability company that he contributed to, and then the distributions to the members, the community members that he wanted to have in the LLC would all receive the distributions, but they'd also get a K1, which is the partnership K1 that would report that income.
Okay. I think that helps as info, but if you guys don't know, Piper Academy LLC, it was all written by him also. Ernest is not just an accountant, he's also a tax attorney. So if anything goes wrong, which it shouldn't, but the IRS, they get wonky sometimes. If anything does go wrong, he's there and his team are there to represent on behalf of you to the IRS in court. So very big two-gun slinger here when it comes to crypto tax. And so another thing that a lot of people don't know, Ernest, is that you're also a crypto trader and a crypto investor. So you got a little degen in you. That ape down there next to you in your picture, that's yours. So it's back on your wall there too. So a lot of people don't probably know that about you. So FD White, I'm going to pass it over to you to ask a couple of questions. Take the floor, man. It's you.
So I do have two questions. Number one, so I've traded, I trade as well. I've never set up that LLC, to be like the trading LLC. I've seen it, but it's just like, I've never actually done it. If I set up an LLC for 2025, could I retroactively put the trading, profits, losses, or whatnot inside the LLC that I make in 2025? Or what if I do it in 2024? Like I do have 3 more days and then do it, or does it have to already be formed when those trades were taking effect?
Yeah, it has to be formed when the trades take effect. And you set up the LLC. As soon as you set up the LLC, you go ahead and transfer those assets into the LLC. and that way the trading that's done on whatever, if it's a wallet, for instance, that wallet then the income that's generated from the assets in that wallet are kept in the LLC. Now, the important thing about setting up an LLC for trading in that instance is that then you're able, if you set up an LLC and you treat your trading as a business, then you are able to deduct the related expenses. Related expenses are going to be your research expenses, your trading view, your memberships to Piper Academy, or your memberships to other clubs, your travel to conferences, those kinds of things, your computer, your office space where you're trading at home, this based on the square footage of your office space versus the square footage of your entire house. There's a lot of expenses that you'll be able to write off if you're treating your trading as a business. If you're not, then you have a Schedule D and you don't have a place to put any of those expenses.
So that's what I was doing. I was doing the Schedule D. I think I
Yep.
did that last year. I did the Schedule D, but I have seen that you can, all these write-offs and things like that. I could have been writing off a ton of things now that you said that. And my second question is,
you're doing
go
it
ahead,
all
bro.
wrong, FD. You're doing it
Oh,
all
man,
wrong.
doing it all wrong.
If you hit the button record or go live at all, you should have an LLC. I've learned all this from Ernest, man. It just, you get with the times, FD. Let's go.
Yeah. Yeah. So, and now that you said that, I have another question about LLCs, and this is, this may be veering off a little bit off of the, the crypto, but a lot of people after they see this might want to start forming these LLCs because we do have a lot of traders in the Piper Academy community. So it's something new, a new form that you have to fill out, or you get like fined like $500 like a day or something. I can't remember what it is. It's like
Yeah. It's
can't
a
remember exactly.
beneficial ownership interest. It's
That's it.
called a BOI, beneficial
BOI.
ownership interest. So we've had a lot of drama over the holidays with the BOIs. Yeah. And so they put BOIs in place. Federal judge put a hold on BOIs, and then another federal court judge withdrew that hold. And now 2 days ago, another judge has put another hold on it, pending the outcome of a case that's pending. And so, as of right this moment, you don't need to file the BOI. That being said, we've been filing them for clients for months, and we have that service that we offer for clients.
I do. And one last question. This is a little bit more geared towards the new administration coming in. So with the new administration coming in and them being a whole lot more crypto friendly, do you think a lot of these tax changes and the way we are have to file taxes or the regulations and things like that, do you think this is going to come to make it a lot easier? Because right now it's getting a lot harder to buy and sell and what you're holding and things. Because I've been holding a lot of crypto since 2020. And I haven't sold. So I've been wanting to start in 2025 to start to, pull some of those profits out and realize some of those gains. So I know a lot of them are short term or a lot of them are long term capital gains, but then I have been buying in 2024 as well, leading up to
Yep.
March. So I know a lot of those are short term gains. So do you think what would be your well, you are a tax professional, so you can give legal advice. What do you think should happen? Do you think I should wait to see how this new administration comes in and see if we get a little bit more laxed when it comes to these regulations or these taxes, or just you think it's just going to be this is how it's going to be, and just go ahead and bite the bullet and start to retract some of these profits out?
For right now, I think the taxes aren't going to be impacted for the moment. That being said, Donald Trump has proposed some things, or he has talked about some things. Some of them being the strategic Bitcoin reserve. Another is someone was talking about the potentially making Bitcoin a U.S. currency. So you would have both your U.S. dollar and you'd have Bitcoin. And the difference in doing that is that if you buy and sell U.S. dollars, there's no gain from buying and selling. And so there would be no gain from buying and selling Bitcoin if it were acknowledged as a second U.S. currency. And so it would essentially eliminate the capital gains tax on Bitcoin, full stop. Do I think that's going to happen right away? No. Do I think it might happen over the next 4 years? Yes. Not financial advice at that point. I'm just saying that I think that's possible. But it's but at the end of the day, Donald Trump is going to be really good for crypto. He's learning. I saw him at the Bitcoin conference, and he still. I mean, anyone that refers to Bitcoin as Bitcoins, you know they throw that S on there, and you're like, okay, they're not Bitcoins. It's Bitcoin. But he's learning, and he's learning through his kids. His kids are really active in the digital asset space, and so really smart people who are helping him along, and I think that we're going to see some relaxation of the rules, both from an SEC perspective and from a tax perspective.
All right, FD, you got any more questions for Ernest?
I mean, I got hundreds, but I'll stick to one last question. I'll stick to one last. Staking. Now, this is something that I've done a lot. We haven't talked about staking, so I've seen something new. I haven't deep dived into it, but with the staking, if it's automatically restaked, like let's say you get the staking rewards, but it's automatically restaked. Well, let's just start with the staking rewards in general. Those are capital gains taxes. So every
those are
time
ordinary income.
income.
Ordinary income. That's right.
Okay.
It's the same way as if you go back to Web 2 and you have money in a bank back when banks used to pay interest, and you received interest from your deposits. Yeah, way back when. I'm kind of old, so they used to do that, honest. So that interest income was ordinary income, and you reported it on your 1040 as ordinary income interest. And so staking income is the same way. It's ordinary income. And there is no instance in which it is capital gains.
Good okay, so when that answers my question, because I've been staking Ethereum for a while, I've been staking Cardano for a while, and how retroactively can I, or how long before I have to report it, or how retroactively can I go back to report it on these upcoming taxes?
Yeah. So the important thing there, when we bring in new clients, we look back at their last 3 years of tax returns, and we make suggestions in the event that there's a place where we should be amending those tax returns, and we can amend those tax returns 3 years after the date of filing. So essentially, if you filed your tax return on April 15th of every year, you have until April 15th of this coming year to amend the last 3 years of tax returns.
Perfect. That's good to know. That's good to know. Thank you.
FD White, I appreciate you jumping in with the questions. I hope that you got them answered. I'm going to jump over here with Ernest. We're going to talk this out, and then we're going to wrap this up. So let's jump over here, Ernest. So what would you say going in right now to the end of the year? We're almost here. It's at the time of recording, we got like 3 days, 4 days. What's the most important thing for people to do in the next 72 hours for next year's taxes?
In the next 72 hours, you need to go to decrypted.tax, and you need to click on the top right corner of the screen. There's a revenue procedure 2024-28, and read that revenue procedure, sign it, and that will assign your cost basis in your wallets and your crypto that you have in your wallets, and then sign up for decrypted.tax to track your crypto and to do your taxes for this coming year. They're going to be more complicated than ever, and so we're here to accomplish that. Our service, as different from CoinLedger or some of the others, is that you have tax professionals that are available to call or email or text, or we have all kinds of different ways of communicating with us. But you can reach out to us, and we can give you we can just schedule a short phone call to talk it through and help you through that. And that's whether you're buying. Our smallest clients have a Cash App account where they're buying crypto on Cash App, and our largest client has 200,000 plus transactions per year, and they're trading all day, every day. We have everything from NFTs to staking to your regular trading crypto to liquid staking, as we've seen with ApeChain, for instance. And so our software will track all of that for you and give you the information you need to report. Also, another plug for Decrypted Tax is that we give audit defense on every tax return we file. And so people have asked me about that a number of times through the years, and I've always stuck to it that if I put you in a position on a tax return, I am never going to charge you anything to defend that position that I put you in on that tax return. And that means I'm not going to put you in a position that's going to get you in trouble, but I'm also going to be there to back up the numbers that I put. And knock on wood, we've never been overturned on audit. My audit calls,
good running record there.
yeah, I'm not saying that it won't happen. I'm sure it will eventually as we grow, but my audit calls are generally 10 minutes of me explaining the client's particular situation and the positions we took on the tax return, and then 50 minutes of me explaining crypto generally to an auditor. They'll say, well, I always had a question about staking, or I always had a question about NFTs. And so I do these informational lessons for IRS auditors regularly when I'm defending audits for clients.
Awesome. Well, I appreciate your time today, Ernest. I know that there was a lot of people that had questions about this stuff. Everyone's concerned. You've seen all over YouTube where people are just dramatizing this like it's some big scary thing. And I knew that you would simplify it for our viewers. So I appreciate your time coming on today. And I definitely will be jumping onto the website today. You guys should too. All the links are going to be down below. So I appreciate it, Ernest. Thank you. Thank you for your time today.
Thank you, brother.
All right. So there you go, guys. That's it. That's today's video for the Legacy series. I hope you guys got something out of today's video and that you learned about the tax changes coming January 1st. Are there questions that you would have asked Ernest? Put them in the comments below. We'll get those answers back out to you guys right here on the channel. And don't forget, if you're serious about staying ahead in the crypto market, hit that like button, subscribe, and turn on notifications. We have 5 live shows daily, and we've got weekly breakdowns just like this to keep you in the game. This is Army Piper signing off of Piper Academy. Until next time, stay sharp, stay focused, and let's ride these cycles together.